All right, welcome back. And the news that's been trending throughout the day is an improvement on the performance of the South African economy, with the GDP figure coming at 3.1%. As you know, that the economy shrank in the first quarter after more than 270 hours of load shedding, weak investment levels, a gold mining strike, and a weak grape harvest. And a 3.2% contraction, the GDP figure was hard to come by. And to help us unpack this is Nadir Thokan, who is an investment strategist at 24/7 Investments. Well, thank you very much for coming, Nadir.
Yeah, thanks for having me.
Before we start with the positive aspects of the GDP performance, will I be right if I say all the sectors that have been underperforming could have given us a more positive outcome if they got their house in order, like the manufacturing and agricultural sector?
Yeah. Look, I mean, I think that there's obviously a weak environment rather for investment, and very elevated unemployment rates is a very difficult quagmire and combination to escape. So, from the first quarter, we continue to see, in fact, agriculture contract. We continue to see construction contract, and which kind of makes sense. We in the midst of probably the bottom of the economic cycle. In that sort of an environment, obviously, there's no large scale construction that's happening, and clearly construction companies are not doing well. So look, we'll take the positives. We've got to take the positives. In fact, 3.1% expansion. We avoided the technical recession. I think President Ramaphosa, of all people, is going to be breathing the biggest sigh of relief. But it's not a great set of numbers if you really unpack the details. So we saw mining expanded by 14.4% in the second quarter. Manufacturing expanded by 2.4% in the second quarter, which on the face of it seems like encouraging numbers, but let's not remember that we had load shedding, as you mentioned at the start of the snippets. We had load shedding in the first quarter of this year, and a lot of those pickups are from in those sectors have to do with the fact that they basically had no output, or severely reduced output during the first quarter of this year. So what that meant is that they had to catch up in the second quarter of this year when we had a stable electricity supply, which obviously provide a bump to the manufacturing and the mining sector. I mean, anecdotally, if we look at the mining sector, we continue to shed jobs there. Those companies continue to rationalize costs, continue to look at mechanization. Yes, in aggregate, commodity prices were higher through the course of the second quarter, which did help output somewhat. But a lot of the miners, particularly in the gold and platinum mining sector, still looking to consolidate their business. So when you look at the report last week by SARS indicating that there had been a contraction in our exports, about 2.8 billion trade deficit for July, because the imports exceeded the exports. I mean, we've been knowing that our export-import ratio has been slanted. Couldn't this perhaps brought about a positive move for us to be more productive and also try to get a break even? Yeah. Look, there's obviously a number of factors which contribute to this, right? So, in fact, there was economic data that came out of the US earlier today, and their manufacturing sector saw the first contraction in 3 years. And it seems kind of random that I'm mentioning that, but obviously economic activity globally is one of the key input ingredients into how much of our exports are demanded overseas, right? And obviously our largest trading partner is China, and the US-China trade war has been weighing significantly on demand out of the world's second largest economy. And anecdotally, you're seeing evidence of economies all over the world slowing down. So there's naturally less demand for South African exports. So I think that's the first point. But the second point as well is that obviously with mining companies scaling back their output significantly, that's also impacting our output. Look, I think South Africa can benefit off the fact that the rand has been exceedingly weak over the course of the last 2 months, breaking through quite quickly, breaking through that 15 rand to the dollar level and remaining elevated above that level. We've seen a bit of strength today on the back of the GDP numbers, but not all that much. So on the back of a very weak rand, that obviously makes our exports look quite attractively priced, and hopefully that can naturally bring the current account further into balance. But what's the biggest contributing factor to that current account deficit for the time being is that there is an expectation for a slowdown in global economic growth.
growth, and on the back of that there's an expectation for tepid demand for exports, particularly commodity and input raw material exports from emerging markets like South Africa around the world.
So let's look at the industries that we don't usually talk about, especially catering, accommodation, as well as general government services. They increased by 3.4%. The factors that we don't normally consider is to expect an uptick in those sectors, but this time around, did they come as a surprise?
Yeah, look, I mean, so those are the encouraging numbers that came out of the GDP print. You know, I mentioned that it's not all celebrations, but we'll take the expansion, and those are the kind of expansions which are obviously, you know, quite encouraging to see. On the government services side, you know, we just got to watch that fiscal situation very closely, and that government is not spending money they don't have, and we are on a very slippery slope on that front. Obviously, we all know the issues there, and we know that there's the ratings update coming in November. So, you know, that's potentially something that's quite precarious and something we have to watch quite carefully. But in terms of hotels, accommodation, catering, you know, one of the biggest reasons for, or one of the biggest kind of talking points for improving economic growth in South Africa is accelerating our visa program so that we can get a reignition in the tourist space and also get working visas for highly skilled individuals. I think that this is, you know, small anecdotal evidence that there is tourism happening, or tourism is improving, and hopefully that can start to contribute to the economy. And, you know, there's a significant number of jobs that can be created in the tourist space. You know, I think the number is somewhere close on 1 million jobs that can be created. You know, should we accelerate that visa program, and should we get tourism rather to where it needs to be? So definitely encouraging signs, but when you look at it in terms of absolute contribution, it's still quite small. I mean, both those sectors contributed less than 0.2% to the overall number of 3.1% expansion in the second quarter.
Right. Nadir, thank you very much for making time.
Thank you. Thanks so much for having me again.
Nadir Thokan is investment strategist with 27 for investments. And over to you, Palestine.